A weak manufacturing index released yesterday and existing home sales released today. What does this mean to your real estate investments and the stock market? We'll cover these questions and much more on today's Market Minute. Today, November 18th, 2022, this morning we had existing sales of homes released, and it came in pretty much as expected. Not a lot of news there. However, yesterday we had a very weak manufacturing survey done. It's called the Philadelphia Fed Index, and that index indicated that the manufacturing mood right now of executives is not encouraging. In other words, they're seeing contraction in the manufacturing sector, and the bond market responded positively as far as interest rates are concerned. The bond market was up yesterday extensively, and then again this morning it was pretty flat based on the existing home sales coming in just slightly above what was expected that way. Next week, we're going into a couple of large reports, most significantly the FOMC, the Federal Open Market Committee, or the Fed, minutes from the last meeting are going to be released. In other words, it's a fly on the wall basically in that meeting. And they're going to look at what the Fed governors were discussing, kind of seeing who was encouraging a higher rate hike, and some members encouraging possibly going to a 50 basis point increase at the next meeting. We'll get the inside view of that meeting on next Wednesday. So we want to keep an eye closely on that. That's at 2 o'clock next week on Wednesday before the Thanksgiving break. What does this mean for you? Interest rates over the last couple of weeks have changed drastically. In other words, they improved last Thursday on the CPI report. Every day since that day, we've seen the market start lower and then go up to where the bond market was that Thursday. What that means is this: the bond market wants to lower interest rates. In other words, that higher bond price is basically the bond market saying, hey, we think we've reached peak rates. The 10-year Treasury is closed right at 3.75, with a new floor now, by the way. That is a new floor as far as interest rates. We break below that, rates could improve even further than what we've seen over this last week. If you're a real estate broker and you have clients in escrow, we're still locking where we can, anything inside of 3 weeks. But beyond that, again, we're seeing rates lower. And so we're floating those loans that we can into the next Fed meeting here early in December. If you found this information useful, drop a like below and be sure to subscribe to our channel. And for our most recent market minutes, you can find them right here. And for our lessons in lending series, what to expect when getting a mortgage, the process, you can find that right here. Again, my name is Brent Starts with Unitas Lending, and this has been your Market Minute.